and listening to fucking all that shit going on at 9 o'clock, I just want to get away. So I much prefer doing the reports the next day actually, because I've got a fresh mind and I'm in a good mood. So I hope you'll be okay with that. I'm sure you will. Anyway, so I've got a couple of things I want to show you today, and that is one. Just this is out of interest. This is an algorithm I wrote on a platform called Ninja Trader, which is a retail platform. It's so say 50% for normal trading, 50% for algorithmic trading. Also, you can write plugins for it. You can buy plugins. It's a really versatile platform, very open platform. It's not open source, but it's an open platform. There's like thousands of developers that write stuff for it and so on. All plugins. Anyway, there's something I wrote several years ago. Several in England, by the way, means two, not 7 or 6. Just one of the English quirks. So I wrote this. This says the 6th of the 6th, 2014, and back tested it. Might be some curve fitting going on here, but this went from 0 to about 1 million in about 6 years. So not bad. I guess that's like maybe 12% compounding a year. Not bad. Especially when you say it's algorithmic. Not fucking amazing either, to be honest. But you don't have to touch this. This wasn't touched. And you can see, I mean, it went kind of well. With hardly any crazy drawdown periods. It's just a nice 45-degree angle, which is always what you want to see when you're seeing profit and loss. If you see massive fucking swings up or down, you know you've got some major issues going on. If you know if I went up to like 400k, and then even a swing up to 400k would have got, is concerning. You don't want to see big swings up or down. Anyway, that's from an angle point of view, at least. That's a beautiful angle. That's all I want to say. Next on the matter is, you asked me the other day about the VIX and will volatility pick up? The short answer is I don't know, obviously, because I don't know anything about the future. But I can tell you that when volatility is very, very low, like it is now, it is fucking incredibly low. Excuse my French there. But it's like I had to go back through my records to actually see when the last time it was this low, and for the VIX futures to be around 13. This doesn't happen very often. Like I think the last time this happened was last year, just before that the super crash in August. And then the time before that was just before the crash in 2008. So this is not really a thesis, it's just the way it is. Basically, when the VIX futures go very low, so let's pretend that this was November last year. The VIX futures were around 15, 16, something like that. And it was just bouncing off the bottom and kind of doing that. But end of the year, this concern for China picked up, etc. And you saw this incredible crash in the markets where the S&P was 300 points further away than it is now, which is a bit nuts. The S&P is at 2,100 at the moment, and it got down to 1820, so it's like 280 points. So when the S&P is high, I mean, you know this, but when the reason I'm telling you this is because when volatility is extremely low, which it is now, you usually, you know that something is going to happen imminently. So you said, well, is it going to be like this for like another year? I categorically not. I think at some point in the next couple months, something's going to really fucking kick off. And around February, when did you start? Like February. Yeah. So we were making a lot of money just around here, and all the way back down again. And it's only once volatility started bottoming again, that's when we started having a bit of a hard time. Because once it gets down here, I'm disinclined to try and sell it, which obviously we were up here. However, to sum this up, the point I'm trying to make is when volatility is very, very low, that is the time to buy volatility, at least with a medium to long-term outlook. Of course, we're in and out the markets the same day. Like, I would never ever hold a sell position overnight now. Never, ever, 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 ever. Because you don't know when that crash is coming. If I'm sitting here, it's fine, I take it off. But the point, to sum this up for the fucking sixth time, there is an increase in volatility coming, not because I know there's one, because I don't, but based on everything I know. Every time volatility gets extremely low, and like, I can't emphasize how low this actually, how low volatility is. It's like, this is like happens like once every couple of years low, right? And once that happens, everyone becomes complacent. Everyone starts taking fucking tons of risk. All the stupid retail equity traders are back in, and they fucking buying the market, buying the market, buying the market. They don't know they're climbing the wall of worry. I mean, we're only 40 points off the record high on the S&P now, less than 400 points off the Dow high, intraday high, not even the closing high, intraday high. These are record fucking highs on the back of poor earnings and a bunch of other bullshit that's going on. Like, it's just like mind-bogglingly insane, where the stock market has been, after a massive breakdown, then a tear up of like 15%. The only reason the market was supported is by share buybacks by the big equity companies, by the big companies, I mean. And everyone's like cheering. Like this is the most hollow, fragile rally I think I've ever seen since I've been watching the markets, which is like over 5 years. It is like nuts. You have to be so fucking crazy to be long the market now. Anyway, enough of that fucking little rant I just had there. Sorry about that. So this will happen, and this will happen in the next few months. It's kind of picking up a little actually. But you see, I'm managing to make some money, because it isn't just coming down. It's starting to pick up. The volatility is picking up. So I reckon we are somewhere around here now. And over the next few months, volatility is going to rise, and we're going to have a good few months. And then once it starts topping again, like, things will slow down, because I'm not going to want to sell it until I know that we're back on the downtrend again in terms of volatility. So the S&P is doing the opposite. So at the moment, the S&P is flying up. You just turn this thing on its head. And that's kind of it for the day. Expectations for the day. I am a little unsure. Well, I'm pretty unsure. However, I would say that we're probably going to see an up day on the S&P. So that's my forecast. Yesterday we saw a down day, so to speak. We closed lower than where we opened. And I said to you, I was pretty sure we would have seen a pullback from wherever we were in the video, which was over 2,100 to below 2095, which we saw it go back to 2091. It was just a little slow. And today we are at 2097 currently. I expect us to go over, you can write this down, 2100, and probably stay there once the market has settled down. I could be wrong, I could be right. I don't give a shit. I don't need to be wrong or right. I can make money either way. Also, I don't have any emotional attachment to being right. I don't need to prove anything, and that's the main thing. I don't need to prove anything to myself. I don't care if I'm wrong. I just go with what I see. But my general expectation today is that we will see the markets probably get over 2100 at some point. If it sticks, fine. If it doesn't, better for us. But that's kind of my feeling. It's 11 o'clock in the morning, still very early. I've not even fired up Bloomberg. I've only just looked at the price action and what treasuries and so on are doing. Treasuries are actually way up, but this is the thing. I'm going to end off on this because yesterday's video was 40 minutes. I thought it felt like 7 when it was like 40. Treasuries were way up this morning, and the market had come off a little. But it's not about treasuries are up. What's the dollar doing? Is the dollar down? That's definitely the sign. That's the way forward. That's definitely not the way forward. What you need to know is what's happening relative to the how the markets are behaving relative to each other at the time. Because if the markets are starting to move against each other, which they do, obviously they are inversely correlated, then basically, even though treasuries are up, you need to be aware that they're falling and how they are falling relative to the S&P. So I said I was going to finish, but I just want to see whether I can. I'm just looking on the other screen here just to see whether I can show you what I mean. Bear with me. One more second, please, sir. Uno momento, per favore. What is that? Treasuries. Let's see if I can lay this over. No, I can't. Fuck. Right. I have to show you another day. I don't want this video to go on too long. But that's kind of my forecast for the day, that we'll see somewhat of an update. Although I have to say my level of confidence isn't particularly high. It's like the markets are just kind of moving around. Treasuries are up, now they're down, coming off, and market was up and market was down and then it's up, and so. But my general feeling, if you had to say balance of probability, 1 being the markets are going to crash, and I know it, and 10 being markets are going to rally hard, I'm probably at about a 6, where I just feel that we have some upward momentum. Again, just from what I see, I see the price action, I see the dollar coming off a little, I see the treasuries coming off a little, and I look at what's going on with the other indexes, and with that limited amounts of information before I started looking at anything else this morning, my thoughts are that the market will probably make a small rally today and will at some point be higher than we were yesterday. So that's it for today. I'll do the sheet just after the start of the upload of this video, and catch you on Skype in a bit. Bye for now.